Good evening. It's Monday, May 1st, 2023, here at precisealgorithmtrading.com. And I'm going to go through the markets real quick and did a little update over the weekend. So let's do these markets first. I talked about this over the weekend. I was getting, because of the bullish percent indexes, I was getting more on the short side. I still might have been right and early, but it doesn't matter because my signals aren't all in alignment. So I jumped the gun and actually got out of all those this morning before anything really happened, and so therefore, maybe I lost a day or two's potential gains through some of this here, but um, over here on the right hand side, like Friday's gain, I didn't really get to take a part of, except for my long stock positions. So um, yeah, live and learn, and it's obviously I'm not a perfect trader. I don't think anybody is, but this is a breakout zone right here across on the right hand, well, actually either side. On the right hand side it's best seen. I could draw a line there. I guess I will. Drawing tools, price level right there, and we'll just fudge in one right here, and we could go all the way up here, and you can see all these wicks. So we're trying to touch as many candles as possible. There's a zone right here where I could probably touch a few more candles, um, but generally speaking, that is a breakout area. And we got the breakout on Friday, and a pullback after a breakout is really common. Then we got target dots to the upside here, and obviously we still have target dots on the weekly chart that haven't been taken out. And typically what happens at breakout areas like this is obviously a recent high back here on the February 2nd. um, I mean, the real interesting thing, and if you've never seen Fibonacci's, I could draw those in too, and I could show you that from that point on February 2nd to the low on March 13th, that would draw 100%. And then if you go for whatever reason, 27.2% higher than the 100% is probably the target that we're going to hit before this thing. Well, it probably will consolidate there, and that's going to be right around that target dot, that upper target dot. It's probably a little bit before the target dot. Well, let's just go draw that in too, since we're here. Percents, and I'll click it right on there. I think it's snap. I've got it snapping to the tops and the bottoms there. There's the 100%, and there's 127.2. So I'm going to leave this on here, and we'll just track it and see what happens. But if this thing comes back and fails below the 78.6 line, which I think is going to be hard to see here, if it fails below the 78.6 line, I'd say we're in for a down market. This thing's going to go want to refill down to either 61.8 or the 50% line. If that happens, I think all bets are off here. But something that could happen is we could get a pullback to the 786, and that would be in on the weekly chart. It would be in just a consolidation zone, and we just got the breakout on the red trail scan indicator from a long-term down trend. We've broken out to a new uptrend, but once it breaks out, it's really common to pull back and screw with us before it can really go higher. Now we also have a squeeze down here. That's a Bollinger Band Keltner channel squeeze, and it has fired one weekly candle this week to the upside. I could explain all that to you, but really what it means after the fire and a squeeze is you're supposed to get 6 to 10 dots in the direction that it came from, which in this case was bullish. So we'll watch that, and it's also really common about a dot or two in after the squeeze fires to get a pullback into these moving averages. So what I'm saying is, after something fires off and it looks like it's going to be nice and long, you'll get a pullback that pulls people underwater before this thing could really take off, or it just runs away um, before people can get on, for the sake of literally tries to go in the direction of uh, the least amount of trades. It wants to go away from where the most trades are. Um, Anyways, that's a little. There's a lot to trading if you really want to make it. The simplest thing is follow these green and red bars, and you know, obviously even I can screw that up sometimes. The simplest things. So what the markets do today? The S&P was down very little, 1.61 points, or minus 0.04%. The Dow Jones Industrials were down 0.14%. The Russell looks like it was up by just a hair. I mean, a real hair. The Nasdaq was down by 0.11. So there you go. Really sideways action today more than anything. After a big move up on Friday, a little bit of pullback to consolidation makes a ton of sense. And I'm also looking intraday. This is the 1 hour and the daily chart laid next to each other. So the 1 hour chart actually is in a pullback zone, and actually has turned bearish. So we'll watch and see if that turns into a bearish trend on the daily, which would potentially turn into a bearish trend overall, and we'll see what happens. And if all that happens and fails, then I'm going to just jump right back into the bearish condition. But I'm not going to do that until all that happens and we get an alignment. In the meantime, we could get, because we have a Fed meeting that starts Tuesday and then ends Wednesday with an announcement on the interest rates, we could get a big pop out of the, after all that. There's going to be a big volatile move one way or another. There usually is. And we could get this thing up and going, and all the bullish percent indexes could reverse. Anything can happen. Just got to keep your eye on what's really going on in the markets. So here is oil, and oil now has, looks like a down signal on everything, but this is just starting on the weekly chart. And we had a big gap, and we've refilled the gap. I actually expect this thing to reverse, but we'll see what happens, because we did top out over here above all these lines, and then we came back. So I think it's just been a deeper pullback than normal, and we're going to get oversold here and then pull back up again and get it to the point where nobody believes, and then potentially go higher. But we shall see. So then bonds, let's look at that. Bonds are big old negative thing, so that's interesting. So we're going to see bonds come down to retest these down here at the 91 level. I don't know. What you could do is draw a box around all this recent rectangular price action, this consolidation zone, and whichever way it breaks along with our indicators, you could trade that direction. All right, that's enough probably on the overall markets. I want to flip to the bullish percent indexes. And see what they did today. Do a quick review of all of them. The industrials didn't do anything. The New York average went up by 0.58%. The transports didn't do anything. The Nasdaq went up by 1.15%. This is what I'm saying. If this thing reverses, I would say we got a lot better chance of the markets actually reversing back to the upside across the board. The NDX up by 2.08%. I'm just going kind of in order. The OEX minus 1.67, so that's interesting. And then the SPX up by 1.46, so that's interesting. So more bullish than bearish, obviously, and all that. So, and then, all right, let's do our. I was going to check this out too, just see where this was for the McClellan oscillators. They pulled all the way back. Um, the real signals are these red lines that's 60 and 60 on both, and when you get on one side or the other, it's considered to be too extreme in one direction or the other. You can see it can get way extreme. This is down in that 300 area, uh, and up in the 200 area, so 250. And so we got a reversal down here, and this actually looks to me like we have opened the door for higher prices, which possibly, again, since the fibs are, since I drew the Fibonacci's on here, they actually translate through the charts if you have your settings the same way I do, and so we can watch that there too a little bit. So let's get rid of that because I just wanted to look at it, and then we'll flip up the bullish percent indexes. So that's one. Let's start here. So here is the Dow on the our automatic trading systems. So these are the systems that we have set up. They automatically trade every day, in and out of positions as it gets signals. And this is the quarterly contract, which has been brutal lately. And but when you look at it in context, it's not terrible. So it's this is a year's worth of data. I pulled up a year's worth. This is not the right chart. I guarantee it. This is I actually did another look at just running some to see what another optimization might look like. This is not what it looks like, so I think I screwed that one up. But so let's ignore that one for today. Here is the NASDAQ, and it's pulled back quite a bit here in the last couple days. But in the long term, it still looks great. This is 6 months worth of data, and it's still really firing on all cylinders. The other one that I wanted to show is go back to this. So this is what the Russell's been looking like, and so I wanted to re-optimize over the weekend and take a look and see if I could do any better. This is, I still think, actually fine, because when I re-optimized, it looks like this. And if you look at that, this had a high point almost around $110,000. This had a high point of around $130,000. But this has pulled way back to $92,000, and this one never did anything like that. This has got like a $10,000 pullback, as generally the most. I think 17 is as high as this gets, and this one here gets to be closer to 30. So I decided to flip my charts to this. I can make this available if anybody wants to email, and instead of the one that is for sale on the site is this one. So, and then I just also wanted to show when we go through and do an optimization, this is kind of what it looks like. This is not in real time. I'm re-optimizing just to see if I can make any improvements on the Dow. And I just got this one started. You can see it was when I cut this and brought it over here. It's just a screenshot. That was on test 4 of 546, and that was the results so far for net profit, and these are the two parameters that I was looking at. So, and I've got it based on highest net profit. I could also base it off of a number of other things that you'd look at if you were going to do an optimization. So that's how this works. It's really not rocket science. My algorithm is based on a program I put together that has a ton of different trading strategies and setups in it, so it could be based off of a number of them. But when I go to optimize it, it just reduces them to the bare minimum things that we need. which is really what these are made of, because I don't want a ton of stuff happening in the background. I want it to be as simple as it can be, but not too simple, so that we can try to make money overall. And that's really the game, the whole game. Um, I guess where was I going to leave you then? Here, this is the new and hopefully improved Russell 2000. This, I did have to up the amount of contracts to make it similar to the other one, which means I have to trade more or pay more in trading fees. But if I have reduced drawdown, then I think it's going to be better for me anyway. And like I say, I think the other one's just fine because it trades trades more often, but with fewer contracts. So there's a trade-off there. But if you look at like this pullback, um, this pullback, this pullback, and this pullback, they all happened on the other chart too. They just happened with a lot more stuff in between. So it's really a trade-off, and it actually, it's nice that both of my systems lined up when I ran them this way to line up this way. So it actually proved. I do this every now and then, take a look at them, and a lot of times don't make any change. So hopefully that didn't confuse anybody, but you can kind of see the process of going through some of this. And it's the stuff I'm trying to do and put out on the website so that traders don't need to care about all that stuff. They just need to turn it on, turn it off every day, and they can be in the market and invested. So I'll leave you guys with that tonight. I hope it helps, and I hope you guys have a good day trading tomorrow. Take care.